Hi, hello, welcome to all. In this video, we are going to discuss about accounts and records EVA bill test your knowledge questions. What is there in first question? That is, Mala Service Limited is a supplier of management consultancy services and it has approached you to ascertain the period for which books of accounts or other documents need to be maintained. So, is a consultancy services. What books are required to maintain? This person is required to maintain books and retain for 72 months. It must be maintained from the date of filing of return, annual return. That is question number. First answer will be seen. Answer number. Answer. As per section 36, stipulate that every registered person is required to keep and maintain books of accounts or other records in accordance with the provisions of section 35 subsection 1. So, as per 36, if a person registered person, he has to maintain keeps books of accounts and other records as per section 35 1. That is, shall retain them until the expiry of 72 months. 72 months from the due date of furnishing of annual return for the year pertaining to such accounts and records. However, if a registered person who is a party to an appeal or revision or any other proceedings before any appellate authority or revisional authority or appellate authority or appellate tribunal or court, whether filed by him or by commissioner or under investigation for an offence under chapter 19, shall retain the books of accounts and other records pertaining to subject matter of such approval or revision of proceedings or investigation for a period 1 year after final disposal of such appeal or revision or proceedings or investigation, or at the period as specified above, whichever is later. For example, you are required to maintain 72 months books of accounts. You are required to maintain 72 months from the due date of filing of annual returns. On 17th month, you got one appeal case on you. You are file an appeal. Then that such books of accounts you have to maintain from that appeal was completed within 6 months. From that 6 months to 1 year, you are required to maintain. That is the case for a period 1 year after final disposal of such appeal or revision of proceedings. Normal, it will be 72 months from the filing of annual return on records. If any person goes for special cases, that is appeal or revisions or another proceedings, he must maintain additionally 1 year after final disposal of such approval. Or if you are got that appeal before 20th month, if you got the appeal on 20th month to completed in 21st month, from 21st month to 1 year means 21st to 1 month means 33 months or 72 months, whichever is later. That is 72 months will be required to maintain books of accounts. That is the first question answer. So first question, 72 months from the date of furnishing of annual return for the year pertaining to such amount and accounts records. Next, SL Group has started making taxable supplies. So you are required to advise. So what we are going to give advice is about accounts and records required to maintain by it as per required section 51. What records going to maintain as per section 51? What he is doing is making taxable supplies. When he is going for taxable supplies, he should maintain all records of stock from manufacturing to payment, that is output payable. That is first, as per section 35(1), stipulate that true and correct accounts. In our audit report, we will give true and fair view, but management must maintain books of accounts true and correct in the following to be maintained. What are the information to be maintained? That is production or manufacture of goods, production or manufacture of goods, and inward and outward supplies of goods or services are both. So production or manufacture of goods related information and inward and outward supplies of goods or services are both information, and stock of goods information, input tax credit availed and output tax paid or payable, and any other particulars as may be prescribed. This information must be maintained by the who is supplying the goods. What is the information? Production, manufacturing, and inward outward stock, input output tax details. This information mandatory for as per section 35(1). Next question. Sawad restaurant has opted for composition scheme. Okay, in the current financial, what is the turnover limit for composition scheme? 150 lakhs normal case, 75 lakhs for specified category, and 50 lakhs for section 10 2A category persons. Okay, current year, discuss records which are not to be maintained by supplier opting for composition scheme levy as per enumerated in rule 56. Which information is not required? Who has opted for composition scheme? He may not require to maintain the details of tax because input tax related and stock of goods related, that is following records are not required to be maintained by a supplier who has opted for composition scheme as per rule 56(2) and 4. 56(2) and 4. So person current is okay. Following records are not required to be maintained by a supplier who has opted for composition scheme as per rule 56(2) and 4, but are required to be maintained by normal taxpayer. Normal taxpayer must maintain all books of accounts, but composition taxpayers is not required. For that information will be stock of goods and details of tax. First is in stock of goods, and second is details of tax. Stock of goods means accounts of stock in respect of goods received and supplied by him. In respect of goods, whatever goods he is received and whatever he supplied by him, and such accounts shall contain particulars of opening balance, receipts, supply of goods lost, stolen, destroyed, written off, disposed by way of gift, free samples, balance of stock including raw material, finished goods, scrap, wastage. This all information is not required for composition. For normal person, it must maintain the record of that information. Why the normal person is required? If that information is related to stolen, destroyed, written off, or free gift, free samples, that are all blacked credit information. You are required to reversal of ITC, or you are required to add back the ITC to output tax liability, so that you must maintain the records of that items only for normal taxable person. Here composition person, he will not take any ITC on that goods, so he will not require to reversal of that ITC, so he is not required to maintain that books. Next, second case, details of tax. Accounts containing the details of tax payable, that is including tax payable under reverse charge basis, tax collected, paid, input tax credit claim together with register of tax invoice, credit note, debit note, demand challenge received. Whatever the information relating to tax is not required, because he will not get any input tax credit, and he will not set off any input tax credit set off, and he will not give any input tax to their recipients. So he is not required to maintain any tax information that is related to any tax period. This is the information not required for composition person, that is stock of goods, details of tax. In stock of goods, all information relating to opening, from opening to wastage up to finished wastage. In details of tax, all information that is including tax payable under reverse charge mechanism, tax collected, paid, input tax credit claim together with registered tax paid, invoices, credit note, debit notes, demand challenge. This all information is bullshit for the composition tax person. Next, question number 4. Question number 4. Not required. Composition opted for composition. Correct financial. Discuss not maintained. Okay. Fourth question is, what is there in fourth question? That is, ABC manufacturer engages Raghav and Sons as an agent to sell goods on its behalf. For the purpose, ABC Manufacturers Limited has supplied the goods through Raghav and Sons, located in Haryana. Enumerates accounts required to be maintained by Raghava and Sons as per Rule 56. Rule 5611. So he is a agent. So what books is required to maintain by the agent, we are going to give. That is as per Rule 56. Authorization details required, and whatever the description is particular, and accounts of every principal is required to maintain. Question number 5th, no? Question number 4th. As per Rule 5611, provide that every agent shall maintain accounts depicting the particulars of authorization received by him for each principal to receive supply of goods or services on behalf of such principal separately maintained. So each principal maintained separately, and authorization received by him for each principal. Next, particulars including, what are the particulars he is required to maintain? Relating to description, value, quantity. Description, value, quantity, wherever applicable, of goods or services received on behalf of every principal. So on related to description, value, quantity will be maintained. Next, particular including description, value and quantity, and of goods or services supplied, and in first case received, and second case received, and the second case supplied on every principal, on behalf of every principal. Next, details of accounts furnished to every principal, that is accounts related data, and taxes paid on receipt or on supply of goods or services effected on behalf of every principal. What are the information is required to be maintained by the agent is, first of all, what is authorization received, and second one, description, value, quantity is received or supplied, and whatever the account is maintaining, that is account furnished to every supplier, and tax paid on receipt of supply or goods. That information is required to maintain by the agent. Next, question number 5. Sindhi toys manufacturers registered in Punjab sold electronic toys to a retail seller in Gujarat at value of 48,000. So he is a registered person in Punjab and he is selling toys in Gujarat at value 48,000, excluding GST liable at the rate of 18%. 48,000 into 18% will be the tax, excluding GST leviable. Okay, he has already collected the 48,000. So we will calculate. Now it want to send the consignment of such toys to retail seller in Gujarat. Whatever he has collected amount, we will treat it as on 48,000 exclusive tax means 18%. It may be become above 50,000, I think so. Okay, you are required to advise Sindhi toys manufacturer on the following issues. Whether e-way bill is mandatory, required to be generated in respect of such movement of goods. When will be required for e-invoice? E-invoice is required only when consignment value exceeds 50,000. Here consignment value, what is our consignment value? If you see in question, the value was provided 48,000, which is bordered to 50,000. We will think that it is not crossed 50,000, so we will give the answer not required. But e-way bill is provided on consignment value, not on taxable value. Consignment value means what? Whatever the amount plus tax amount. This is given in question, that is exclusive of taxes. Add the tax amount. If that amount does not exceed the 50,000, then e-way bill is not mandatory. So if you had the 48,000 plus 18%, I think it will cost 50,000. So it is mandatory for get e-way bill that case. Next, if yes, who is required to generate the e-way bill? Who is required to generate the e-way bill? The generation of registered person who is furnishing, part A furnished by the registered person who is causing movement of goods. So movement of goods who is causing, that person is provide the part A details, and part B details, that is transportation details, furnished by the person who is transporting the goods. Who is transporting the goods. This is the information. And where next, third question, what will be the consequences for non-issuance of e-way bill? If you are not provided e-invoice, then you will get a penalty at the rate of 10,000 or whatever the tax amount avoided, whichever is applicable and which is greater. Question number 6th, question number 5th, no? Okay. As per section 138 of the CGST rules 2017 provides that e-way bill is mandatory, required to be generated if the goods are moved inter area in relation to supply and consignment value exceeds 50,000. When will be required for e-way bill mandatory? That is consignment value exceeds 50,000. Here consignment value. Further explanation 2, Rule 138 stipulates that consignment value of goods shall be the value determined accordance with the provisions of section 15. What is there in section 15? Section 15 means amount paid or payable relating to value. It is the transaction value, and there must be a price will be unrelated person and price will be sole consideration. That is section 15 deals. Section 15 declared in an invoice, bill of supply or delivery channels, as the case may be, issued in respect of said consignment, and also includes CGST, GST, UGST, IGST and cess, whatever the charges applicable, if any, in the document, and shall be excluded value of exempted supply of goods, where invoice is issued in respect of both exempted and taxable supply of goods. Accordingly, given case, the consignment value will be as follow. That is 48,000 into 18%, that is exclusively they provided. Add 18% to 48,000, then it will become 56,640. So hence the movement of goods in relation to supply of goods and consignment value exceeds 50,000. So e-way bill is mandatory, required to be issued in the given case. Next, second case, an e-way bill contains two parts. E-way bill contains two parts, that is part A and part B. What is there in part A? Part A to be furnished by the registered person who is causing movement of goods of consignment value exceeding 50,000, and part B, this is related to transport details, is to be furnished by the person who is transporting the goods. First two details will be who is causing the movement of consignment, registered person who is causing, and second will who is transporting the goods. Next, where the goods are transported by the registered person as a consignor or a recipient of supply as the consignee, where it in his own conveyance or hired one or public conveyance by road, as the said person shall generate e-way bill. So here owner may use any way of transport, for he may use his own conveyance or hired one or public conveyance or by road, or said person shall generate e-way bill on common portal after furnishing information in part B. Next, where the goods are transported by rails or by air or vessel, the e-way bill shall be generated by the registered person being the supplier or the recipient, who shall either before or after the commencement of movement furnishes on the common portal the information in part B. Next, where goods are handed over to a transporter for transportation by road, the registered person shall furnish the information relating to transporter on the common portal, and e-way bill shall be generated by the transporter who will issue by the transporter on the said portal on the basis of information furnished by the registered person. Next, where container or containing has not generated the EVA bill and aggregate of consignment value of goods carried in the conveyance is more than 50,000, then the transporter, except in case transportation of goods by railways, airways or vessel, shall in respect of interstate supply generate the EVA bill on basis of invoice or bill of supply or delivery challenge, as the case may be, by may also generate consolidated EVA bill on the common portal prior to movement of goods. Here transporter may on his own he will take unconsolidated EVA bill. Next, C. What is this? If it is mandatory to generate EVA bill in all cases where the value of consignment of goods being transported more than 50,000 and it is not otherwise exempted in terms of Rule 138.14 of CGST Rules 2017, if EVA bill wherever required are not issued in accordance with the provisions contained in Rule 138, the same will be considered as contravention of rules. If you are not issued EVA bill, you are contravene the provisions, contravene the rules. As per section 122 of CGST Act 2017, a taxable person who transport any taxable goods without cover specified documents, that is, one specified document is EVA bill, one specified document, shall be liable to pay penalty of 10,000 rupees penalty. Ten thousand will be the penalty or tax answer to avoid. Moreover, mandatory, that is amount will be penalty 10,000 or tax to be avoided, whichever is greater. Moreover, as per section 129, what is there in section 129 of CGST Act, where any person transport any goods or stores any goods while they are in transit in contravention of the provisions of this Act or the rules made thereunder, all such goods and conveyance used in means of transport for carrying said goods and documents relating to such goods and conveyance shall be liable for detention or seizure. The goods may be detained or seizure will be happen when you are not providing the proper information relating to such goods. Next, question number 6. What is there in question number 6? That is Power Electricals Limited, a registered supplier of air conditioner, is required to send from Mumbai, Maharashtra, a consignment of part of air conditioner to be replaced under warranty at various clients' location in Gujarat. Okay, the value of consignment declared in delivery challan accompanying the goods is 70,000. Okay, amount is 70,000. Power Electricals claim that since movement of goods to Gujarat is caused due to reason other than supply, there is no other than supply, so there are EVA bill is non-mandatory required to be generated. In this case, for that answer was provided. Here the consignment is exceed 50,000, then mandatory for generated, but whatever the claim is providing by the Power Electricals, bill is not mandatory, that is momentum of goods is caused due to reason other than supply is not correct. మనకి అట్లా ఏమన్నా ఉన్నాని అలా జరగని మీన్స్ వాట్ ఎవర్ ద రీజన్ దేర్ మే బీ ఏ మూవింగ్ గూడ్స్ and the value is exceeding 50,000, then it is required to get EVA bill. The answer, question number 7, sorry, 6th question. The goods to be moved to another state for replacement under warranty is not supply. Actually it is not supply. However, Rule 138 of CGST Act inter alia stipulates that every registered person who caused momentum of goods of consignment value exceeding 50,000 in relation to supply or for reason other than supply. Here provided that other than supply or due to inward supply from unregistered person shall generate an electronic way bill before commencement of such movement. So they are already covered that there may be supply, other than supply or inward supply for an unregistered person. You are required to get mandatory for e-way bill. CBIC wide FAQ on e-way bill has also clarified that even if momentum of goods is caused due to reason other than supply, including replacement of goods under warranty, e-way bill is required to be issued. Thus, in the given case, since consignment value exceeds 50,000, e-way bill is required to be mandatory generated. Therefore, the claim of Power Electrical Limited that e-way bill is not mandatory required to be generated as the movement of goods is caused due to reason other than supply is not correct. That is question number 6. Next, what is there in question number 7? In question number 7, they provide that Beauty Cosmetics Limited has multiple wholesale outlets of cosmetic product in Mumbai, Maharashtra. It receives an order for cosmetic worth 1,20,000 inclusive of GST leviable at the rate of 18%. So on that 1,20,000 it is inclusive of GST from person owner of retail cosmetic store in Delhi. While checking the stock, it is found that order worth 55,000 can be fulfilled from company Dadar Mumbai store and remaining goods worth 65,000 was sent from its Malad Mumbai store. Both the stores instructed to issue separate invoices. So they are instructed separate invoices for the goods sent Prasanna. The goods are transported to Prasanna in Delhi in a single conveyance owned by Radhe Transporter. Next, you are required to advise Beauty Cosmetic with regard to issue of e-way bill. So for e-bill, they may issue one consolidated e-way bill for transportation of goods if the goods are going for only in one vehicle. It is their option. So question number 7th answer. BC Cosmetic Limited would require to prepare two separate e-way bill since each invoice value exceeds 50,000 and each invoice is considered as one consignment for the purpose of generating e-way bill. And the FAQ on e-way bill issued by CBIC clarify that if multiple invoices are issued by the supplier to one recipient, that is for momentum of goods of more than one invoice of same container and the consignee, multiple e-way bill have to be generated. In other words, for each invoice, one e-way bill has to be generated irrespective of fact whether same or different containers or consignees are involved. Multiple invoices cannot be clubbed to generate one e-way bill. However, after generating all e-way bills, e may consolidate e-way bills. One consolidated e-way bill can be prepared for transportation of purpose if the goods are going one vehicle. So he must prepare two separate e-way bills because there is two invoices, and after generating all the e-way bills, he may consolidate e-way bill. E-way bill can be prepared for transportation purpose. For the transportation purpose, he may prepare consolidation invoice. That is allowable. This is question number 7.